Are you long-term, short-term? What are you looking at where we see opportunities at right now?
Yeah, well, I think it's going to be a pretty tough time for a lot of investors because we're kind of, in many ways, going back to a bit of the dynamic that we saw in 2022, which is an environment where maybe both stocks and bonds don't do very well, right?
Which that was an outlier. That was one of the worst years for 60-40 in the last century.
That's right. It was a real surprise in terms of the magnitude of the tightening. People were very much taken by surprise on that. And I think the problem is we're set up for a similar style surprise in late 23 and early 24. And that's because you have so much expectations of earnings growth in the stock market that will be challenging to achieve.
Yeah.
And at the same time, you already have interest rate cuts priced into the bond market, given the meaningfully inverted yield curve. And so it's easy to have disappointment on both fronts.
Yeah.
Right? Where earnings don't come in like expectations and the Fed doesn't cut quite as fast as people expect. I think the one area that's a bit mispriced and we're seeing it price in over and over more and more is the commodity complex, right? Which has been very soft, for much of the year, where, you get a little bit of tightening in the commodity complex and you start to get those prices to rise. Yeah. And if anything, that's the thing that will really hurt the 60-40 in addition, because it just makes the Fed's dynamics more challenging. So you put that together, 60-40, very tough environment for 60-40. So you got to look outside that, whether it's to commodities, gold, and maybe alpha, right?
Sure.
Looking for active management to help navigate through this challenging market environment.
I agree with commodities. I'm underexposed personally, but I think there's some great opportunity there. And you look at like copper, for example. I mean, the amount of copper that's going to be needed for renewable energy, electric vehicles, the supply is not there.
That's right.
If you do the math, it's just not there.
And tactically, what you're seeing is those markets are in tight supply. You're seeing inventories being drawn down. So you are seeing sort of tactical dynamics that look good for those markets at the time when you're also seeing these more strategic environments that are positive for the commodity.
Yeah, I think it's just patience. You got to sit on those and let that play out.
That's right. Like anything, it's about creating a diversified set of positions, and particularly looking for things that maybe they're not sure things, but they're sort of tilted and skewed in your direction, particularly in the event, that you try and get a couple of bets that are on both sides of whether growth is better than outcome expectations or worse than expectations. And so that's why I kind of like, the long commodity positions with maybe underweight stocks, underweight bonds.
Because the economy does well, copper is going to do well, and the commodities will go up.
Exactly. So you want to just really find those those lowly correlated or zero correlated positions, and where you just have a little bit of edge where it's more likely than not that it goes in your direction.